we have joining us for this Professor Kevin Urama. He is the Chief Economist and Vice President for Economic Governance and Knowledge Management at the African Development Bank Group, AfDB. Prof, a Happy New Year. This is the first time I'm talking to you this year, I believe. Good to have you on the show.
Happy New Year, my sister. It's good to speak with you today.
Great. So I'll start with some of your key observations that you have shared generally on the economy, the African economy in 2025. So we see that, especially at one of the meetings, and I think I was in this meeting also. I had like 2 or 3 of your meetings last year where you said that Africa could mobilize an additional $1.43 trillion in domestic resources through tax efficiency. But you also highlighted the issue of illicit flows and digitization. You said that resource leakages has led to the loss of about $587 billion annually to corruption, illicit financial flows. That's illicit financial flows took a chunk of $90 billion. Profit shifting by multinationals, that swallowed up $275 billion. And you said human capital could add $47 billion to GDP if workforce participation improves. And you also highlighted the importance of AfCFTA, which could boost continental income by $450 billion by 2035. If you could help us expatiate on this and perhaps other observations that you saw in the African economy last year.
Thank you very much. First, as you've said, we are in an era where Africa is showing a lot of significant resilience in its growth and growth pathways. And also we're seeing a lot of transformative reforms that's going on across several African countries. And if I would say, Africa is actually surprising the world with regard to how economic development is happening on the continent since the post-COVID pandemic era. For 2025, we see that Africa's growth is expected to reach 4.2%. That's about 0.7 percentage point growth in 1 year alone. And in 2026, this might reach up to 4.5%. And this growth is very broad-based, with 32 African countries actually recording growth increases, and up to 22 African countries growing by more than 5 percentage points in terms of GDP growth. My sister, you will be elated to hear that Africa will host 12 of the 20 fastest growing economies in the world by the year at the end of 2025. Basically, Africa in 2025, 12 of the 20 fastest growing economies in the world were in this dear continent, Africa. And this growth rate that we're seeing means that Africa by 2026 could surpass Asia as the fastest growing region of the world. And this is happening because of a lot of reforms to curb illicit financial flows, to drive domestic revenue mobilization, to boost investments in industrialization and trade in Africa, and several other reforms that we have seen happening across the continent. So this growth pattern also leads to what we have seen in terms of increments in GDP per capita growth doubling since the year 2022. And all these things are very positive growth patterns that we see on the continent. Now, with regards to the curbing illicit financial flows and the domestic revenue mobilization, we have seen a lot of reforms across several African countries to boost domestic revenue mobilization. As you were giving us the feedback from Davos and the need for countries to look inwards, and you can see that Africa is already doing that in several areas. And tax to GDP ratios in Africa has begun to increase, including in Nigeria, due to a lot of the reforms that we have seen that is happening across the continent. So overall, the growth outlook for the continent in 2025, 2026, and 2027 are really, really very positive. And up to 6 African countries are already surpassing the threshold that we had estimated in 2024 in our key actions for inclusive growth for Africa, that is exceeding 7 percentage growth in Africa for in the year 2023. We have countries like Rwanda, we have Ethiopia, we have Senegal, we have Niger, Guinea, and also Benin, that's already surpassing this threshold, which we have estimated will help to boost growth, improve job creation, reduce poverty on the continent. So all these things are very positive in terms of what's going on. And more interestingly, that growth pattern is broad-based across African regions, and we're seeing Eastern Africa continue to be the trailblazer, having growth projections of around 6%, specifically 5.6% in 2025 and up to 6.1% in 2026. And different regions, since we're in West Africa, the Western Africa region is also growing faster than expected, with 4.8 percentage growth estimated in 2025. And this is because of great reforms that we have seen in different African countries, large economies of that region, including Nigeria. And Nigeria is expected to have grown by about 3.89% in 2025. And all of these growth outcomes we are seeing are due to a lot of the reforms and inward-looking policies that African countries has implemented since our release of that report you were citing, which was on making Africa's capital work for Africa's development. As you already mentioned, we have seen a lot we see a lot of leakages on the continent, as you mentioned in the summaries that you gave, due to weak economic reforms and economic policies that we had before, but not anymore. We're now beginning to see a lot of improvements in many of the African countries in those regards. And the knock-on effect of this is that many macroeconomic fundamentals on the continent are improving. Inflation is reducing on the continent, now expected to reach below the double digit by 2026. And also currency in Africa is stabilizing against the dollar, with 35 African countries gaining appreciations in their currency against the dollar in 2025. And also, when you look at debt dynamics, the same is happening. Our debt to GDP ratio is improving in Africa. And across sectors, we see that even though the debt service and debt refinancing risk remain to be high on the continent, the stock of debt on the continent is going down, estimated to now go to about 62% of GDP. And trade frictions have continued to increase, but also very interestingly, in Africa, the impacts of the tariffs has been very minimal, with Africa recording trade balances in several countries. So, I would say that our expectations in Africa is a positive, resilient growth in the medium to the long term.
All right, Prof. You did a summary of everything there, but we would like to touch on some of those things. First of all, as a Nigerian, I guess you should expect that I will ask this. I didn't see Nigeria among the top performing countries, and I'm saying, what's going on? Have we already surpassed that level or what?
Now, Nigeria, you have to always think about the starting point. Nigerian government has implemented a lot of transformative reforms in the past few years, and that has continued to improve the growth performance of the country in all aspects. Like, if you look at the Nigerian economy, as I've mentioned, the estimated growth for 2025 is 3.89%. This is a marginal increase from what we had in 2024. And normally what we look at in these estimates and reports is the direction of travel. Because when you are talking about percentage growth increases, large economies, the percentage growth increases might look smaller, but in real terms, they are actually growing the economies much better. If you look at a percentage is just a ratio of what you had before. So that's the issue with Nigeria. So Nigeria is really on a very positive trajectory with all the reforms that are going on in the country. And now I've seen strengthening fiscal and monetary policy coordination in Africa that is also creating stability in the Naira and several other indicators on the continent. Like I've said, the positive growth trajectory is very broad-based, across the countries by regions and also by economic groupings. And Nigeria is not left behind in this. That's very positive signals that we're seeing. But to continue to sustain the reforms and implement the reforms, and also continued engagement with the citizenry to ensure that people understand the need for these reforms that are ongoing, continues to remain important in Nigeria. Also for debt, Nigeria has improved in terms of its debt to GDP ratio, but debt to revenue ratio in Nigeria still remains high, but the direction of travel is still very positive. So fiscal performance has also improved in Nigeria on the revenue side, with up to 22% higher revenue generated in 2025 compared to 2024. So again, if we look at Nigeria as a very large economy in the continent, the direction of travel is very positive. And like I've said, the growth rates that we're seeing, the increment in growth rates in Western Africa region is actually credited to the growth rates that we have seen, improvements in growth rates we have seen in the large economies in that region, including Nigeria.
So do we have a projection for the GDP for Nigeria for 2026?
Yes, Nigeria in 2026 is expected to continue to improve in its GDP growth. There are several factors that we are watching, which will define the define the exact projection that we have, but it's on a very positive trajectory.
All right, Prof. I mean, looking at Africa now, the issue of illicit flows, I know that the AfDB has really, you've had a lot of sessions and meetings on this. I wonder if you could give us latest numbers, any improvements to the efforts of governments on the continent to block these leakages that's costing us hundreds of billions of dollars, if not more.
Again, staying in Nigeria, you see a lot of reforms, including the new tax bills in the country, the digitization of tax administration, the simplification of the tax administration, and different reforms that are going on. All these all derive from the impacts of digitization that we have continued to emphasize is central to curbing illicit financial flows. The new estimates for illicit financial flows for 2025 is yet to be finalized, but you will expect that with digitization of taxation and better improvements in compliance in tax administration, and also better digitization across different sectors in the countries, in Africa, we're expecting that all those will continue to start having implications for reducing the outflows that we have on the continent. And the impacts you see on real GDP growth and GDP per capita growth are all evidence that we can also derive from to show emphasis on reforms and transparency and accountability are all going to pay dividends in the medium to the long term. And as you may remember, my dear sister, we also launched this report on Public Service Delivery Index for Africa, and we are currently engaging to do surveys to be able to understand, especially not just the financial numbers, but the implications of these reforms on the lives of people on the ground and how people perceive public service delivery that is happening across the continent. So maybe during our annual meetings, when the African Economic Outlook report for 2026 will be released, we'll be better prepared to provide the numbers you are asking for.
All right, Prof. Thank you. And I'll certainly be looking forward to that, because I know that you also have your eyes on the public service. One of the meetings you had last year was on that. And I know that more countries are participating in that. I would also like to talk about the management of debt. I know you said it's optimistic. maybe generally now, if you can give us an outlook, do you have numbers yet of what we can expect looking at the use of capital, more trade going on the continent, especially intra-African trade, and how this could affect debt for 2026?
Thank you very much. Like I was already said, the Africa's debt dynamics is improving significantly, but challenges remain. Within measuring the debt to GDP ratios on the continent, we have seen a steady decline in the debt to GDP ratio since the post-pandemic era. It has declined from 66.3% in 2023 to now 62% between 2025 and 2026. That's what we estimate in terms of the direction. And this decline is signaling improving debt sustainability across the continent and more predictable macro environment, which again will attract better investments. As you can see, FDI inflows on the continent in the 2025 have also increased. And all these, coupled with domestic revenue mobilization, will all improve the debt dynamics on the continent. Remember, debt sustainability measures are always looking at ratios, debt to GDP ratio, debt to revenue ratio, debt to this ratio, and so on. So the more we improve, refocus not only on the quantum of debt, but also on the other side of the equation with regard to domestic revenue mobilization, we will continue to see improvements in our debt dynamics on the continent. But the challenges that remain are more driven by global economic fundamentals, because the rating agencies and the risk profiles of the countries, as currently being estimated, continue to hike the cost of debt on the continent, and debt refinancing on the continent remain high because of the stock of debt that were borrowed in previous years. Because of all these factors, we're seeing two major risks in the debt dynamics on the continent. And one is the debt refinancing risks, which is estimated to cost the continent on average about $10 billion every year up to 2031. And this is not because of new borrowings. This is because of the stock of debt that's already borrowed during the low interest rate era to invest in infrastructure and other things. And this is why the African Development Bank worked with the African Union Commission to develop the Africa Financing Stability Mechanism to help in this debt refinancing that is becoming a challenge and will remain a challenge for some time in the continent. And the other challenge there is the switch from lower cost, longer term development financing to higher cost, shorter term commercial loans that African countries have to face because of the change in the structure of debt currently. And again, a number of initiatives by the African Development Bank, including local currency financing and other things that is going on, are being designed in order to help to improve that. Now, the dominance of the dollar with regard to the currency within which Africa borrows and pays its debt remains another problem, which we need to continue to look into how to address, including creating hedging solutions, like I've said, local currency investment instruments, and so on and so forth. And finally, as you may we may remember, the African Development Bank in 2022 worked with the IMF and the World Bank and other agencies to set up the Africa Public Finance Management Academy, within which we have been training several African debt managers and finance officers to be able to better negotiate and also better manage the debt structures, the debt in their countries. So again, we are seeing positive trajectory in this area, and I'm hoping that we're going to continue to see positive trajectories as we continue to implement capacity building, institutional reforms, but also more importantly, accelerate domestic revenue mobilization in the continent so that we're able to repay our debts without having to recourse to more debt in order to repay debt.
All right, that's an interesting one. Pay off our debts without recurring to more debts. But Professor, please just give us a minute. We need to take a commercial break or a break. When we come back, we'll continue with the conversation. We still have issues as the drivers of that growth. which AfDB is very positive on. We will look at that. And the big one, infrastructure funding. That's a major one. Insufficient or underdeveloped infrastructure on the continent, both for intra-country trades and even inter-country trades. Those are some of the hurdles which Africa has to overcome to hit some of those numbers that's being projected. But that's after the break. Please stay with us. You're welcome back. You're still watching Business Morning right here on Channels Television, and we've been speaking with the chief economist of the African Development Bank Group, Professor Kevin Urama, telling us the outlook of AfDB for the year, for the continent, for 2026. Prof, thank you for staying on.
Thank you very much.
So, Prof, at the foundation of all of these plans and outlook and development is infrastructure. Now, Africa's infrastructure development says that they need about between 130 to 170 billion annually if we are to close that gap. I wonder what the AfDB sees about this issue of infrastructural gap.
Thank you very much. Those estimates with regard to infrastructure financing gap, we have estimates for the different sectors for Africa's infrastructure on what is needed in order to be able to build resilient infrastructure to address the development needs of the continent. And then, but this is also at the backdrop of the estimates we've made with regard to the sources of financing that is available to Africa domestically that we can be able to mobilize. If you look at our African Economic Outlook report in 2025, which you cited at the beginning, we have the opportunities of mobilizing up to 1.43 trillion US dollars to be able to finance our own development. If you compare the numbers, you will see that there's huge opportunities for Africa by just improving efficiency in tax administration and tax collection, reducing illicit financial flows, and also addressing the risk ratings, risk pricing on the continent, and all those issues, and addressing corruption, to be able to retain enough resources to be able to invest in this, to fill this infrastructure investment gap. In fact, if Africa plays its cards well with regard to proper macroeconomic management, which we are seeing a lot of improvements in, if we continue to maintain the trajectory over time, Africa will be able to finance that infrastructure financing gap. But again, under the leadership of President CDO Tar, the new president of the African Development Bank, there has been a number of initiatives that is helping to make Africa actually mobilize that domestic resources that we have talked about and be able to retain that 1.43 trillion to finance its gap. He calls it the 4 cardinal points. The first one is clear, innovative ways of mobilizing and leveraging resources from Africa and Africa financing institutions and also global partners to be able to address that financing gap. You'll hear a lot more about this during our annual meetings. But one that I want to talk about is the new infrastructure that he is building with regard to what he calls NAFA, the new African financing architecture, where African institutions collaborate more, where have national development banks, regional development banks, African Development Bank, and others coming together under the principles of subsidiarity to be able to pool resources better and better identify and co-finance large infrastructure development projects across the continent. And it's just to say that there's quite a number of innovative ways of being able to fill that infrastructure financing gap that you mentioned, and a lot more will be discussed during our annual meetings in May in that regard. But again, the positive trend here is that Africa has identified that gap and is taking strategic effort to be able to address those gaps across different sectors on the continent. And there's a lot of positive outlook in that regard as well, because identifying a problem is one thing, but innovating to find solutions for that problem is another. And African Development Bank, under the leadership of President Tar, is actually leading the pack, working together with all the African financing institutions to find solutions to this.
All right, Prof. I mean, it seems like your AGM is already packed. We expect a whole lot because you keep referring us to your meeting in May, and well, we hope that we would be there. But as we come to a conclusion now, let's look at the drivers for this positive outlook that you have for 2026. We see things like strong consumption, and there you said there's expectation of wage increases in Egypt, South Africa, and Ghana. A global shift, a weaker dollar. We've seen that even this week. I think the dollar hit a 2-week low this week. And then, of course, the debt management, which you've already talked about, and then the intra-regional trade, which we saw started in 2025. Intra-African trade really increased. What trend do you see for all of this to push on? For instance, in Nigeria, it's a pre-election year. Do you expect disruption or distraction? We know that, I mean, a lot of things are happening globally now and sometimes seeping into the continent. What distractions or disruptions could stop these key drivers from actually birthing the positive outlook that the AfDB has for 2026?
Yeah, thank you very much. When I say this growth is broad-based and also the resilience that we have seen in the African continent since the post-pandemic year, that's one of the things. The issue resilience is that Africa has continued to surprise the world with regards to expectations of growth and the impacts of global tensions, global policy changes, but also national and regional changes that we've seen in these past years. These have not been able to actually stop the trend with regards to GDP growth, GDP per capita growth, and the improvements that we've seen on the continent. Take, for example, the trade tariffs you mentioned when you were relaying to us what was going on in Davos. There were expectations that this will have significant implications for growth on the continent, but this has not happened that much. So I have reasons to be very optimistic that African economic reforms has become robust enough to be able to withstand shocks. And that is why we keep talking about the resilience of the African economies. Now, but that doesn't mean there are no risks. The risks that I've mentioned before include the fact that the high cost of capital and debt refinancing risks could be a game changer for the continent if African countries do not increase the domestic revenue mobilization and put in institutional systems that will help African countries to refinance its debts. So that high cost of capital and debt refinancing risks remain a major macroeconomic risk that we need to look at significantly. Now, the trade tensions and frictions that we see in the global trade and the disruptions in global supply chains, all of these pose challenges, but they also come with opportunities for what you have referred to deepening regional integration, regional economic integration on the continent, trying to focus a lot more on Africa's own sovereignty, improving Africa's agency in trade, in commerce, and in all the things that we do. And those opportunities have been recognized before the challenges through the AfCFTA that's endorsed by the African Union. Again, it's more of implementing and continuing that trajectory, staying the course of those policy changes that have already been enacted in Africa will help Africa to address that risk. But another one, which relates to what you talked about in Davos, I'm very pleased to see the Nigerian government in Davos on talking about the natural resources and how to harness those resources and leverage the global transitions on green transitions to ensure that our natural resources play a key role in driving those transitions, but also a key role in creating domestic revenue and royalties for for the Nigerian government, and also the same for the African continent. My sister, when you look at the key minerals that will drive the global transitions, the nickels, the cobalt, the lithium, and the rest of that, most of African countries have rich deposits on these. Now, but the challenge is, how do we relate with these resources? Are we going to be issuing minerals development, mining development concessions, or minerals development agreements? So these are two different things, because the mining concessions we've continued to give makes Africa trade at a very low value chain in the whole minerals value chain. And trading at that low value chain, you get low revenue coming from your natural resources. So African countries need to continue now to look at how to improve the minerals development within Africa through a number of policies we had already recommended during our AEO 2024 and 2025, including franchising and local content policy that a number of African countries are already engaging with and trying to drive, including Nigeria. So commodity dependence needs to end in terms of depending on trading low value add and low technology input commodities in order to get short-term revenue, but also selling out jobs and selling out value addition and the rest of things. So that is very important for us to focus on. But climate shocks remains a major challenge, and it continues to increase because the physical impacts of climate change has continued to now become a fiscal risk for many African countries and also globally. So we need to continue to watch all these risks and turn those risks to opportunities for innovation and opportunities for growth on the continent. And I'm very pleased also to say that based on the work we're doing across the continent, a number of African countries are doing just the right things in interacting with these risks and finding opportunities to use them as levers for growth.
All right, Prof, thank you so much. And it's all to make Africa's resources work for Africans. And we appreciate the work of AfDB. Of course, we would always ask for more. So at the end of 2026, we'll ask how much of this have we been able to make work for Africans. Thank you so much for your time, Chief Economist and Vice President for Economic Governance and Knowledge Management at the African Development Bank Group, Professor Kevin Rama.
Thank you very much for having me.